Welcome. Today we're breaking down a recent cycle in the S&P 500, but we're going to be looking at it through a really unique lens. It's a system called market DNA, and it's a purely geometric way of looking at the markets. We're going to walk through a real-world case study, phase by phase, so let's dive right in.
Now, what really sets market DNA apart is that it's all about geometry. There are no other typical indicators involved, and we're going to observe how this method was applied to a real market cycle, exactly as it happened. This explainer is here to document that process, using the model's own predefined structure, and we'll get to see how the plan stacked up against reality.
Okay, but before we go any further, we have to get the legal stuff out of the way. This is not, and I repeat, not financial advice. What we're doing here is simply documenting a proprietary model for public information. Remember, investing always involves risk, so please, never invest essential personal funds. And it's really important to note that this specific system prohibits using leverage any higher than 10. All right, let's get into the system itself. First up, we need to set some ground rules for this geometric approach. Because to really understand it, it's just as important to know what this system isn't as what it is.
And this is a really key point. Market DNA completely avoids all standard technical or fundamental analysis. That means you won't see common indicators like Fibonacci levels or Elliott waves here. Instead, the entire system is built on a predefined set of geometric shapes, and it follows a very structured four-phase process, which we're about to see in action.
So let's kick things off with phase 1, the plan. This is the initial blueprint for the entire cycle, and it's crucial to remember that everything we're about to look at was laid out right at the start on February 5th, 2026.
So here it is. This is the S&P 500 chart from that day. You can see the system's geometric structure laid right over the price action. Now at this point, the system had already identified two potential entry levels for this cycle. There was a primary entry, which you can see there labeled M, and also a secondary entry, which is labeled P.
The plan also came with a very detailed risk preview. This was all based on a hypothetical capital of $100,000, with a max allowed drawdown of 5%. This table really breaks it all down for us. We see the entry prices we just talked about, but it also defines some key system parameters. For example, the trapezoid time duration, which set an 18-day window for the whole cycle. And then there's the third triangle domain, which is a percentage used for the system's risk math. So all of these inputs led to a calculated trade size of 1.28 for each of those potential entries.
And just to really emphasize how systematic the risk management is, the model's documentation requires this specific statement be included. It says, both trade sizes are calculated using the hypothetical capital, the investor's maximum allowed drawdown, the third triangle domain percentage, the risk coefficient, and the contract size. This just reinforces that everything is calculated methodically, based on predefined inputs.
Now, a plan doesn't just define entries, right? It also lays out potential exits right from the very start. As we can see in this table, there were three primary targets. Target 2, which is located at a key geometric point the system calls apex N, projected a 4.48% return if both of the entries were triggered. Then there's Target 3, the full exit at the very top of the trapezoid, which projected a 2.35% return, but that was for the scenario where only the first entry was actually hit. So, that was the plan on paper. Now let's see what actually happened in the market. This next section is all about documenting the cycle as it unfolded, comparing that plan to reality.
And this is where things get really interesting. You might expect a cycle to just unfold sequentially, 1, 2, 3, 4, but that's not what happened here at all. This particular cycle followed an alternative sequence. After phase 1, the entry, the market actually completed phase 3 before it completed phase 2. Let's break down how that played out on the chart.
So, after the primary trade was open at level M, the price took a little dip, which was enough to activate that secondary entry at level PC. But then, from that low point, the market just rallied. Only one day later, on February 6th, the price hit apex N. This event officially triggered the completion of phase 3. And, at that point, the secondary position that was open to PC was closed. But the upward move didn't stop there at apex N. After phase 3 was done, the price just kept on climbing. 3 days later, on February 9th, it made contact with another key geometric boundary, which the system calls the mirror delay line. This contact marks the completion of phase 2. So the unusual path this cycle took was confirmed. Phase 1, then 3, then 2.
So after all that action, where does that leave us? Let's take a look at the current status of the trade. Here's the summary as of the last data point we have on February 9th.
Okay, so to recap where things stand as of February 9th, the primary position, the one from level M, that's still open. The secondary position from PIC was closed out when Phase 3 completed at apex N. So what this means is the overall cycle is still considered incomplete, and the next key event, according to the model structure, is the potential completion of Phase 4. And that would happen if the price reaches the top of the trapezoid.
And that, of course, leaves us with the big question. Will the price continue on to the trapezoid top and complete Phase 4? Well, this documentation is still ongoing, and only the market's movement from here will give us the answer.
So, what you've seen here is a documentation of one single cycle within the market DNA system. If you'd like to see more public case studies like this one, and you want to follow the documentation of this geometric approach, you can find them over on the Market DNA Edge website.
And we'll end right where we began with one last, very important reminder. This analysis is for documentation purposes, and that's it. It is absolutely not a recommendation to buy or sell anything. Investing always carries significant risk, and any risk management has to be tailored to your own specific instructions and situation. Thanks for joining us for this explainer.